Very good morning to you traders. Mark here from Day Trading Room. Time is 20 to 11 London time on a Monday morning. Our first couple of things I want to mention is summer trading. Now we are into summer. I really would call this summer now because first second week of July. As soon as the kids break up from school, then that really does sort of cement summer in my eyes. And last year, obviously, very volatile, lots of news flow, which is a pleasant surprise. But generally, we have to expect that summer is less volatile. Ranges are smaller, volume flow is less, and personally, for me, the way I trade summer, or expect to trade summer, and I'm not saying this is definitely going to happen, but we've got to be prepared for it. Hopefully, we'll have some volatility. We've got some news, potential news flow coming out from Europe, etc. But that could be prolonged, and we could have a quiet summer. Historically, summer is quiet, but for me, how do I prepare for summer? Well, first thing is I reduce my size. I'm not going to be trading 60 lots in the summer period unless we get that volatility. I'm going to reduce my size right down, uh, take fewer trades, and take it as an opportunity to work on other aspects of your trading or do something completely different, and almost use it to your advantage. Take the time. If the market is quiet, then capitalize on it and take time to maybe evaluate some of your trading or take a complete break. So for me, I do my normal pre-market checks. If the overnight range is low, then I'll look to see what the open is going to be like. If there isn't an opening trade, then I'll give it an hour or so and I walk away from the screen. More than likely, I'll set some alerts, highs and lows, and my alerts then send me an SMS message to my phone, so I can have that with me. And if I see that alert, it means I can come back to the screen, settle down. I'm not missing some sort of extreme move. Now, I'm not necessarily going to trade if I come back. I just want to come back and I just have a look and see what the chart's doing. If it's just probing highs and lows and I'm not really interested in taking a counter trend trade, I won't trade it. If we've sort of blasted off to new highs, loads of volume coming in, then obviously I need to sit down, reassess, get in tune with it, and maybe look for some setups. So that's a good way of doing it. So it frees you up, but then you're still at the market as well. And if you've got an iPad or something like that, some great apps out there now. You can get real-time charts. If you're not an American citizen, you can download IG Index. You don't have to be a client. You don't have to log in. Basically, if you turn it to no, on the iPad you don't have to turn it to landscape. So on the iPhone you can turn it to landscape, and you've got a real-time chart of the Dow Cash. And on the iPad you don't have to do that. You've got real-time Dow Cash and some other markets they have there, and you can tap on them and it gives you the chart without even having to log in as a client. So that's a nice little app for European and UK traders. Don't think it's available for US citizens, but other than that, you've got obviously Bloomberg. I think that's 15 minutes delayed. Interactive brokers, not sure if that's delayed. TradeStation. So there's plenty of little tools you can put on your smartphone or your iPad to keep in touch with the markets. Just gives you that freedom to do some other things. You don't have to be looking at the screen. Sometimes I may be at the desk. I may just turn my screen off and just be working on bits and pieces. Going through trades, going through paperwork, whatever. Just allows you that little bit of a break without getting sucked into markets that are very, very quiet. So you've got to be aware that that's potentially going to be the case in summer. Volatility is going to be lower, volume is going to be lower. Don't let it suck you into trades that aren't really there. We all want to trade, but just have that little bit of extra discipline and just be cautious. Just set your plan in place before the day. If it doesn't happen, then don't trade. Okay, one thing that I wanted to just mention is getting caught out in this quiet environment, how to be careful, and what to look for to make sure you're not chasing things that aren't really there. Something a lot of people ask me, chasing markets, they're getting a little bit frustrated, feel they're missing out and chasing. So there's a little tool that you can use to stop you chasing. Now, tick index is a big favorite thing of mine, and one thing you can do, I'm not a big fan of indicators, if anyone's done the new program, been to the support webinars, etc., you're going to know that I don't really use a lot of indicators. However, they have got a place in trading, and using them as a filter, as a way of helping you with an existing setup is fine. So Here I've got some Keltner bands. What setting I've got these on? I think I've got these on 2.5. No, 2s. 20 is the length and the ATR is 2. Now Keltners are very similar to Bollingers, except they don't expand with the volatility. They're just an average true range rather than a standard deviation, which is a Bollinger band. So the idea of these is to put them on your ticks and to stop you chasing. I'm not suggesting taking a trade based on this, but it's a way of keeping you out of trouble. So when we're breaking into high levels, breaking the upper Keltner or the lower Keltner on the ticks, then don't chase that. Wait for an unwinding if you wanted to, or if it fits in with your plan, take that counter trend. It's just a way of stopping you from, chasing markets and getting caught in those little volatility things, and you assume it's volatility. The good thing about ticks is that they are their own range. It doesn't really care what the market's range is. The market could be swinging 50 points per couple of minutes. The ticks would still be doing their own thing, and the same, the market could be swinging 5 or 6 ticks in a couple of minutes and the ticks are still doing their own thing. So they're a good way of keeping a perspective on what's going on. You haven't been chasing it there. Same here, high tick reading, we've got it stops you from getting stopped out on that one. Again, even on the low side, just instead of chasing on this low tick here, waiting for them to unwind a bit, not selling short when you're under that lower Keltner, or not buying when you're above that top Keltner. There again, stop you from chasing. If you wanted the long, wait for a little bit of unwinding, give yourself a little bit of a chance. Okay, so it's just a little way of allowing that spring to relax, if you like. So I'm just going to put a drawing pen out here. So you can imagine, we've got that rubber band effect. We get that stretched rubber band. We're not looking to take the short on the stretch. We're waiting for that just to retrace a little bit. It may not come back to equilibrium point, but it's just going to come back a little bit before we're looking to take the short. And if we do get stopped, the main thing is that we are giving it that little bit of room. We're more than likely going to get our first scales off there. So if you find yourself chasing, it's a good little tool to use in these lower volatility environments. I'm not a big fan of clustering up charts, but it just stops you from getting excited by these candles. Like this is a good example here. You see this little down candle here, you start jumping on it, just go, hang on a second, what the tick's doing? Okay, we're out the Keltner, let's just reassess, let's wait, let's just see what happens when they retrace back to the equilibrium point or the 0 point or whatever you're looking at the time. So good little tool there, worth doing if you're having trouble chasing trades. So other than that, not a lot to report really. Very low trading for me, especially last week, obviously with the 4th of July, the day off, and just generally less traders at the screen. So news flow was a little bit slack. Obviously we had the non-farm payrolls on jobs number on Friday. But we'll see. I'm prepared for volatility. We're in some good levels at the moment. The 60-minute is interesting on the Dow. We've got some interesting levels on crude oil as well. So there is some action. It's not completely dead yet, but I'm prepared to, if I see nothing after the first hour of trading, to step back, to do something else, to take this opportunity to set my alerts, and as I say, get those to send me a text message. If they fire off, come back, have a look. If they don't, come back for the last hour and see what's going on. We're not trying to force things, reducing size, managing risk, and not getting caught up in, and also watching the scale, guys. That's a big thing that just be careful of. If yourself, on the auto scale on your 1 minute and you're zoomed right in and you're going, oh, look, there's a spike up there, just take a step back and have a look and say, actually, no, it's an 8 tick spike. If you need to, whatever platform you've got, Ninja, TradeStation, use a fixed scale. You can use a fixed scale of, say, 150 ticks, or just drag it with the background dragging so that it puts it into perspective based on perhaps a 5-day range. If your 5-day range is 2 or 300 and you're getting, you're in a 20 tick range, then just minimize that, drag that scale down. Or the other thing is just take the 1 minute chart off your screen completely. Put on a 5 minute, put on a 15 minute, just to keep that in perspective, so you're not chasing those little bursts, those little moves as we things there. Number one, using those Keltners on the ticks. If you feel that's a good thing to stop you chasing, whack those on. Number two, watching a scale on your charts. Number 3, stepping back on the time frame. And number 4, just literally stepping away from the screen. I hope we get some volatility. I do hope we get some action. But if we don't, then the one of the key things that I learned a long time ago, and really you tend to look over it a bit, is instead of improving your winning trades, is if you look at all your losing trades and your winning trades for the year, and let's say you halved your losing trades, how much better would your P&L be for the year? Significantly better, I suspect. So managing the losing trades, even though it feels like you're playing defense a little bit, and we all want to trade, we want to get on our trades, but sometimes just hanging back, managing those losers, cutting those down, it's the hidden profit, if you like. You know, we don't see the work it does. We can all see a great trade. You all see a trade, put a trade on, it works well. You put in some money in your trading account, you feel fantastic. You know, that's what we're all about. But actually, the hidden thing of not doing anything, of not actually making that losing trade, really does help the bottom line. So don't forget about that, and don't think that you feel like you're not doing anything for your trading career. You're not doing anything for your wealth accumulation or your trading pot accumulation by doing 9. It may not feel like it, but it does wonders for your bottom line. And if you have to sit through a period of low volatility before we come back in and trade actively again in the autumn Christmas period, then so be it. The markets aren't always volatile. As traders, as day traders especially, our job is to work harder and smarter when the volatility is there and step back when it's not. So just a few ideas on how not to get caught out if you do choose to trade it. So let's hope for some action, guys. Number one thing, managing risk, capital preservation, number one thing, and it's really, really key. So good trading, guys. Back with another video. Actually, before I continue, I'm not going to say this again, not going to keep saying it, but the new program's out. It's been a while since I've done it. I've been a while since I've done a video on YouTube because I've been finishing off this program, but the new program's out, and I've compiled it with the what I call the Trader Mastermind series, which is webinars every fortnight. We get together, building a trading community, trying to get this good community of good traders together, and every fortnight we go through new aspects of trading ideas. And this week we're going to be talking about making those trading breakthroughs. So hurdles, discipline issues, breaking rules, some of the things that I've used to break through those and to get to the next level, because a lot of you are so close to where you want to be, but you're just not quite getting there, making the same mistake over and over again. So I'm going to probably make that a 2-part series of webinars. So that program's there. If you're interested in that, that's great. I'd love to see you at the webinars. Then the videos are now all available to stream instantly. Revamp the site to allow you to access that instantly, etc. But if you're not, that's absolutely fine. These videos are still going to be coming every week or every 2 weeks onto YouTube, and hopefully you get something from that. And obviously you can email me anytime, mark@thedaytradingroom.com. Okay guys, manage risk, number one thing, capital preservation, and don't forget, if you're not in the markets, don't think you're not doing anything. It really does help your bottom line. Good trading, guys.